You ever have one of those moments? You're sitting in your car, staring at your banking app, trying to figure out if buying toothpaste is going to trigger an overdraft fee? And then you open Instagram, and your coworker, who you know makes the exact same salary as you, is on her second European vacation this month. How? How is that even possible?
Right? It's a question that can make you feel like you're going crazy. You start wondering, did she win the lottery? Is she secretly drowning in credit card debt? Well, the answer is usually neither. The truth is, it almost always comes down to two totally different paths that start from the exact same line.
So, let's meet our two people, Jessica and Amanda. On paper, they're clones. Same age, 28, same salary, $65,000. But look closer. There's one little difference that tells you everything you need to know about their financial futures. It's the car. One chose the default path. The other, well, she chose something else entirely.
Okay, so first, let's talk about Amanda's path. We're calling it the default spending trap, because honestly, it's the path most of us fall into without even realizing it. It's the path of normal purchases and tiny leaks that just quietly suck your future wealth away.
A lot of times, it starts with something big, something emotional. You get that promotion, you finally feel like you've made it, and you decide you've earned that dream ride. Maybe it's a brand new truck. You roll in financing, fees, the whole shebang. All in, you're looking at 70 grand. And it feels great. It feels like you're investing in yourself.
But here's the brutal, cold, hard truth. In 6 years, when you finally make that last payment, that beautiful truck will have lost more than $53,000 in value. This quote just nails it. It's not an investment. You've essentially just taken a pile of cash and set it ablaze. Money that could have been working for you is just gone.
Now, the leaks aren't always that massive. Sometimes they're sneakier. They disguise themselves as being a good friend. I like to call this the friendship tax. It's all the money you spend not because you truly want to, but because saying no feels like you're letting everyone down.
Think about it. Your buddy decides he wants his bachelor party in Vegas. Boom. Between the flights, the hotel, the fancy dinners, and everything else, you just drop $1,400 on a single weekend. Now what happens when you have 3 or 4 weddings in one year? You're out thousands, just trying to keep up with your friends.
So when people say, I don't know where I could possibly find an extra $500 a month, well, here it is. It's hiding in plain sight. The average person is spending almost $300 a month on subscriptions, many they forgot they even had, and another $300 on restaurants and delivery. Throw in a few impulse buys with those buy now, pay later schemes, and a car payment that's just a little too high, and poof, that money vanishes. Okay, enough doom and gloom. Let's switch gears and talk about Jessica's path. This isn't about being a cheapskate or living on ramen, not at all. It's about setting up a simple, kind of boring system that just hums along in the background, making you rich.
And this is it. This is the secret sauce, the $500 a month rule. It's not about trying to be a stock market genius, it's about pure, simple consistency. You take that missing $500, you have it automatically invested into a broad market index fund every single month, and then, this is key, you forget about it. You just let it do its thing. And seriously, look how easy this is. You can get this entire thing set up in less time than it takes to watch an episode of your favorite show. Open an account, link your bank, buy one simple fund that tracks the whole market, set up that automatic transfer, and then, and this is the hardest but most important step, you walk away. You pretend it doesn't even exist. And you don't need to be an expert. Just pick one of these super low-cost funds. Think of it this way. Instead of trying to find one magic seed that might grow into a tree, you're just buying a tiny piece of the entire forest. You're betting on the whole U.S. economy to grow over time, which it has a pretty good track record of doing. And because the fees are practically zero, you actually get to keep the money you make. All right, now you need to brace yourself, because this is the part where things get a little mind-bending. This is where that boring $500 a month transforms into an actual superpower. So let's run the numbers. Over a 40-year career, if you stick to that $500 a month plan, you will have personally saved $240,000. That is an incredible accomplishment, a lot of discipline. But that's not the important number. This is the number that matters. While you were busy putting in your 240 grand, the market, thanks to the absolute magic of compound growth, kicked in almost $3 million. You did the work of planting the seeds, but the system, the market, grew an entire forest for you. I mean, just look at this chart. It lays it all out. All your hard work, your saving, your discipline, it accounts for that tiny little orange sliver, less than 8% of the final pile of cash.
The other 92%, that was just your money making money all on its own year after year.
Now, I'm not gonna lie, the beginning feels slow. That first 100,000 is the hardest. It can feel like it takes forever. But then, something amazing happens. The snowball starts rolling downhill. The time it takes to stack up another $1 million gets shorter and shorter and shorter. It picks up a momentum all its own.
So, you see, it really all comes back to a single choice, a simple decision that you can make in about 30 minutes, but a decision that will echo for the next 40 years of your life. And you are, whether you realize it or not, choosing between these two futures right now.
Let's check back in on Jessica and Amanda. At age 65, Jessica, the one with the boring Honda and the automated $500 investment, is a multi-millionaire. She is financially free. She answers to no one. Amanda, who always had the nice car and went on all the trips, has less than $500,000 and is staring down the barrel of working until she's 72. Same salary, same starting line, just a different choice.
You know, both of these people exist inside of you right now as a potential future. And the only thing that decides which one becomes your reality is the choice you make. Not next year, not after the next raise, but maybe in the next 30 minutes. Because at the end of the day, this whole thing, it's not really about piling up a bunch of money just for the sake of it. It's about buying your freedom. The real goal isn't to hit some magic number in your bank account. The goal is to build a life where you don't even have to think about the number anymore, because you finally earned the right to focus on everything else that truly matters.